and it's doomed, and it's going to fail. And I will guarantee the only difference, the reason for this inflated stock, because Elon Musk said, oh, but look at my solar, look at Solar City, look at the panels, look at the battery plant. The battery plant, in my estimation, is a joke.
We had a bear on earlier. We had a bear on earlier who put the value at $350. Didn't say to short it right now because there's clearly a momentum game or something happening right now.
What's interesting is it doesn't seem to be able to find a natural level where sellers come in because they're like Ron Barron. The shareholder base is kind of like me. They're believers.
Right. Loyal.
Tesla has always been on the receiving end of a lot of negative attention. For a long time, it was the second most shorted stock out there. But recently, things have changed. In just 4 months, Tesla managed to see an increase of over 200, now close to 300% in their stock price. They were burning shorts and showing no signs of slowing. This has left analysts scrambling, trying to figure out what the true price of Tesla is, and they're doing a pretty terrible job at it. It seems like just about every firm would make their estimate just about 30% higher than the current price. It's not a prediction of the company, it's just betting that the stock price will keep going up. Recently, some analysts have started to get pretty wild with it, giving Tesla potential future valuations of over $1 trillion.
What's it going to be worth? I mean, gee, and I can't see how, of course you can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
It's pretty evident that all their estimates are pretty much just a shot in the dark. No one really knows what's going on, so they're just taking their best guess and hoping that that's correct. That being said, these estimates that we're starting to see from analysts do provide actual value. They give us an insight into the mind of the institutional investor. They're so focused on micro movements and what's happening right now that they ignore the trends that are right in front of them until it's just too obvious to do that. And no case makes that clearer than Tesla. For the longest time, Tesla was the stock to hate. People were looking for every reason that they could to hate the company. Everyone except for retail investors. Investors like you and me.
I do think that a lot of the retail investors actually have deeper and more accurate insights than many of the big institutional investors, and certainly better insights than many of the analysts. It seems like if people really looked at some of the smart retail investor analysts, what some of the smaller retail investors predicted about the future of Tesla, you'd probably get the highest accuracy and remarkable insight from some of those predictions.
While everyone on Wall Street was so absorbed of when exactly Tesla was going to fail, they failed to miss the bigger trends. They never heard about how much people love their Teslas. They never saw the millions of views Tesla-related videos get. They spend so much of their time trying to predict the future that they miss what's going on right in front of them. Quarter after quarter, Tesla has seen increasing sales, increasing production, and increased efficiency, yet that was never factored into the stock price until recently. Tesla has been breaking ground in laying the framework for how electric car companies should work, running into problems and solving them head on. They struggled for many years, having problems with production and getting their cars to market, but finally their stock is off the ground and is reflecting the current position that Tesla is in. They already own almost the entire EV market, and with the rate that other auto manufacturers are moving, that doesn't look like it's going to change anytime soon. Tesla was built from the ground up to produce electric cars. They made key decisions early that would allow them to build EVs at scale. Tesla produces their own batteries in partnership with Panasonic and has been constantly developing them to reduce the price and increase efficiency.
Look at my solar, look at Solar City, look at the panels, look at the battery plant. The battery plant, in my estimation, is a joke.
While Tesla has been pushing forward with what's possible with the technology in their cars and the batteries, hiring all the best professionals, older auto manufacturers still have to deal with their legacy positions. They are filled with professionals who know how to build engines, but not batteries. And the process of letting go of these outdated positions is lengthy and very expensive. So it'll make these car companies take a huge hit when they finally decide to turn it around and start producing EVs. These big ships turn slow and they're set to take a big loss in the process. Right now, it seems like their only hope is with a company like Rivian, who supplies them with a skateboard-like frame that they build on top of. Companies like Amazon have already made big bets on Rivian's success. However, all of it comes down to Rivian's ability to meet battery demand, which has proven to be an issue for just about everyone in the industry. Tesla not only has a huge head start on battery production, but they've also set themselves up with a way to recycle old batteries. Once the batteries are no longer suitable for high output cycling in cars, they can be used in those Tesla battery centers that you're seeing popping up across the world. This could be huge news for the trade-in values of Teslas, and it would also lower the cost of building those battery stations that have already proven to be useful and profitable in places like Australia. Where things can really skyrocket for Tesla is if they're able to win the race to bring affordable autopilot to market. Currently, there's a few competitors in the autonomous driving space, each with their own slightly different technology, but where Tesla managed to put themselves miles ahead is in their data collection, putting out a record 360,000 cars this year, many fitted with autopilot, and each collecting data that can be used to better the self-driving AI. Tesla has a pretty good chance at being the first ones to bring this to market. AI becomes better the more examples it's shown. So the more human behavior you see it and the more it observes, the better it can replicate that safely. So when you compare Tesla's huge fleet of cars actively collecting data across the world to Google's Waymo, which has a small fleet in a few cities, you can see that it might be hard for Google to adapt that to new and novel situations that Tesla might have already seen hundreds of times. They also have a great way to bring it to market. If Google Waymo cracks the code, they still have to get it on cars that are out there. Tesla has been fitting their cars with autopilot for years now. They've been upgrading the technology to make sure that all old Teslas out there can still be upgraded and fitted with self-driving technology. With the potential to take over ride-sharing, long-haul trucking, and affect many other industries, it makes autonomous driving a very exciting and profitable race to bring this technology to market first. Morgan Stanley analysts recently gave Google Waymo a valuation of $105 billion. So considering the position Tesla is in right now, even with the record high market cap of $164 billion, it still looks undervalued. Everything Tesla has done up to this point can be woven together in a cohesive way, the same way that Amazon built itself up from the beginning, and it gives that potential to dominate entire sectors. In the end, Tesla's a very volatile investment right now, and there's a lot of contingencies for its success. Most of the price movements that are going on right now are mainly just due to FOMO. You have institutional investors scared to miss out on the next Amazon, so they're just piling their money in. Shorts are getting burnt, and it's doing nothing but pushing the price up. People have gotten emotional, and that's why it's the most important thing ever to do your own research. Come to your own conclusions and invest accordingly. There's a lot that could go right for Tesla right now, and there's also a lot that could go wrong. But if things swing Tesla's way, I wouldn't be surprised to see them reach a market cap anywhere between $500 billion to $1 trillion within the next decade. There's a lot that could go right for Tesla, and there's also a lot that could go wrong. But if things swing Tesla's way and they keep up the momentum they have right now, I wouldn't be surprised to see them reach a market cap anywhere between $500 billion to $1 trillion within the next decade. If you guys are still watching, I just want to say thank you. You're awesome. I appreciate every single viewer. You guys have shown amazing support. If you guys enjoyed this sort of in-depth content and want to see more like it, then please let me know in the comments. Don't forget to like and subscribe. It really helps out with the YouTube algorithm and promoting this content to other people. If you dislike the video, please dislike it. Anyways, I'll see you later.